The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going in Raw, we discuss trading around a core.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in raw.
Featuring Dan, Deity of Dips,
And Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, October the 3rd. I had to look at my calendar. Yeah, so I hope everyone enjoyed the Reno episode. Yeah, I know I was a little drunk. We planned it out kind of poorly. Well, I mean, I guess the planning wasn't the problem. It was if I'm at a bar, I'm going to get hammered, and we just happened to be waiting at a bar for 5 hours prior. So, but yeah, I mean, if my mic could have been muted, it probably would have been a little better. But I mean, hey, that was fun. If you were there, you understood. You were probably drunk too, but. Next time, I think what's more impressive was the fact I spoke at a school the next day. So, I mean, and didn't get in trouble. Hugh actually said the more questionable thing that got him in trouble.
Well, okay. First off, I think that we learned a lot as being our first live event. Overall, huge success. I mean, we couldn't believe the amount of people that came. Originally, we were like, hey, if like 30, 40 people show up, that's a win. And then all of a sudden we sent out like a little Eventbrite, and I mean, we had hundreds of people signing up. So that was super cool. What an awesome event. I had an awesome time. And, I felt like we learned a lot. And I mean, we did a lot because I flew in from Egypt.
Yeah, the itinerary was packed. And you had to do more than we did. Like every time where we were just at the bar, he was like at a school doing stuff. So, yeah, no, I mean,
I had to go to class.
Yeah. Like our manager always says, we're building this plane as we're flying it. And,
shout out to him.
And one of the pilots is drunk.
Yeah.
But, also, shout out to our manager, Sean. He did just have a baby girl. I hope it's a girl.
Girl.
But yeah, congratulations to him, on his second kid. But I think, there's some stuff to talk about this week. CEI is up probably like 50% on the week, and people are real upset because on Wednesday it popped all the way to 485. I believe it peaked May 488, and it followed that up with 2 halt downs. I think in the second halt down, there was even a fake offering prospectus that got made. I don't know if you saw that one. And went under 3 and then popped up, halted up, and it went over. It was like the thing to watch on Wednesday. Ended up after hours going above 4 again. What's the price right now as we record this on Thursday at 11 Eastern time?
Yeah, so we're sitting right now right around that 405, 402 area. And I think the biggest thing to note, and the biggest thing that always comes to my mind is, and something I had to explain last night, is that this is bigger than retail. This is not four dudes or, four frat bros in Sig Chi, Sig Chi, whatever, hanging around, slapping. Yeah, whatever.
You had it right.
I don't know, dude. I was in Greek life.
Yeah.
I was in Greek life.
You barely have the English alphabet right. So I'm not going to force the Greek one on you just yet.
Thanks, bro. But my point is that this isn't like four bros sitting around having a beer like, let's slap CEI with Zach Morris and Hugh Henny and Dan Dippity. Like, there was 1 billion shares traded yesterday, the 29th. If the average price was $4 a share, which is probably higher, that's 4 billion monetary exchanging hands. That is way bigger than retail. I mean, let's think about this. And if this continues, this could be insane. We talked about it when SPY flushes that a lot of money usually comes into pennies. But this is like a different level. Like, this is levels I've never seen. We talked a lot about funds that have day traders or, like let's call it prop funds, and, they'll flee to the small caps. But this is like real big money coming into CEI who some people are calling a shell company. So my point is that I really think that the momentum through the end of the year could be insane. In fact, could be.
I think the reason why a lot of people may just think of it as like the four, like the guys with just following Zach and just like people on retail slapping it is because they see it get called as a penny stock, and then literally 3 weeks later, less than a month later, it's already at like 480. I was telling someone the other day, a month ago, whenever Laid Back called this at his entry. If you put in 100,000 shares, that's a new Honda Civic. Yesterday, at its peak, that was $500,000.
Yeah. And, I mean, that's insane. In what, like 3 weeks?
3 weeks.
Whatever?
I think it's like 29 days. I don't know. Maybe it was trading days. But yeah, it was like just around a month.
Yeah. Which is just insane. And I think that just to our point that we were talking about is that if this kind of momentum is what's going to continue to drive small caps, I mean, we could see more moves like this. Some of us have NAC. I was looking at, some TBLT earlier. I was looking at some, NACD or whatever, like those are moves where if real money and real volume becomes behind these stocks, I mean, these really will move.
So is it just like this because the oil price is going the way it's going, or could this also work with like SND? I know that's got some chatter. I mentioned it the other day because of and it, like with the weed legislation vote. If that, could that bring bigger money to like maybe the weed stocks, or does it not need a catalyst?
No, definitely. But the one key difference that I will say is that CEI, until their financials become current, can't raise. Which something tells me that their executive team is literally like licking their chops to try and raise. Because again, like this company is very dilutive. One thing that we definitely wanted to mention is that we saw getting passed around is that a lot of people were talking about that CEI was trading at like 1,000 or something at one point. Yet it wasn't actually trading at 1,183. What is that? $11,837 per share. It was never trading there. It's because of they've done so many reverse splits and so many offerings that the price ends up getting all screwed up because they do so many reverse splits and they're so dilutive. But the point to this is that I'll be interested because once their current financials become up to date, or once their financials become current, I would probably expect an offering. Now, this has so much volume if this continues this volume, then the offering won't matter. They could do like $100 million offering and it'll be swept up in an hour. So there's two keys to this is that if CEI does continue with this much volume and they do drop an offering, this thing could continue to go because that's what I think everyone's waiting to sell for is the offering. But again, if they're
everyone was waiting for 488 to sell yesterday.
And so my thing is that if it's truly like we're still continuing to do billions of dollars in exchange every single day, then $100 million offering will not matter. And this could seriously turn into something crazy. Now, the other point to this is that because I do believe that real money is behind this, is that if the real money decides, hey, we made nice gains on this, I'm out. Well, then that's when we get into like that big down. Yeah. And so that's what I mean is that like kind of like this trader intuition kind of has to come into play here, and you have to be smart. And that's where we get into trading around the core.
Yeah. And before we get into trade around the core, just something you mentioned, I don't know if there's a tool out there that exists like this, but one, if it could be made, it'd be nice is, like a charting, but it shows where it'll be like a line where a reverse split will happen. And then the price just changes, like, hey, it was 100. Now we have a chart in the chart, but that'd be nice. Yeah. No, I agree with you. And just to a point, if you're holding from underneath $1, what was it? You could have sold 20% of your position.
Okay.
So, as we go into trade around the core. Okay. So if something is up 1,000%, you can sell. I don't even want to get into how low that. But no, if it's up 500%, even if you bought it at 50 cents and it went to $2.50, you could sell 20% of your position, and your cost basis would be free. So if you had 100 shares at 50 cents, so $50 at $2.50, that'd be worth $2,500, and those 20 shares would cover your entire $50.
Yeah, and
20%, and then you have 80% of your position riding completely free. Doesn't matter if it gets OTC, if the CEO kills 80 people, doesn't matter. You'll never lose money.
Yeah. And so as we get into trading around the core, I think that this is super important because I really do believe that if big money does continue to start to track these smaller companies, then we're going to see things moon. Like we're going to see things moonshot, especially if we get into a situation like CEI where they can't dilute. Then we will. That might become like the new theme is that anything that can't, dilute or anything like that, or doesn't have enough authorized shares to dilute, then that could become the new theme. And if big money gets behind this, then we will see things moon 1,000%, 500%. And so this is where last 16 months, you could hold something for 1,000, 2,000%. And be fine. Now, CEI is up it is up 1,000. Yeah, it's up over like 1,200%, even at this price. And we really need to talk about trading around the core because we're seeing big moves. One day it'll be up 30% and the next day down 40%.
We haven't seen it down but that's the thing. I think what makes trading around the core difficult for a stock like this, when it's going up 20% and it's just piss missling all the time. If you sell some on pops, it's like, you will get drops because it is like, as Tommy called it yesterday, an ATM. It goes up, goes down. For day traders, it's nice too. But when it's green every day, all day, it's you start to think like maybe I can get this dip later. But that's why trading around the core on such a stock that's just going up is, and it's mentally tough too because you're like, damn, I shouldn't have sold any of these if you don't get a chance to buy them back.
No, exactly. And the range is like $1, $1.50, which is incredible. I won't touch CEI for day trades just because I know that I'll get into a situation to where like I'll buy a breakout, it'll fail. I'll add more, it'll fail. I'll stop out, then it'll piss missile.
Yeah, I don't think but if we're talking about trading around a core, I think like the past 2 days, it's I'm just saying the past 2 days, I think it's a bad example for CEI just because of how it's halted like 14 times. It's hard to talk about trade,
Yeah. And the other thing that why it's important to trade around the core is that when we saw the last administration, I was talking to the class at Reno just the other night about this, is that what we saw was we saw an ascending triangle that was almost every time the 50-day moving average was bought, and we would see all-time highs within like 2 weeks. Now, with this new administration, it almost feels like we're going to be inside a range. It doesn't feel the same. It doesn't feel like that continuous ascending triangle. So if we get into one of those situations to where the market's kind of inside like a W, or even trading inside a range, and it might break out a little bit, but then create a new range. If it's not like doing 30% a year, which is insane, then even on large caps and even on your 401k, your Roth, your longer term holds, this is when trading around the core can take your 401k like 30%, 40% in a year, even if the market only moves 5, 6, 7%. And all it really comes down to is understanding key levels. And that's where we want to talk about trading around the core. So trading around the core, you trade around the core the most, I think, out of the two of us by far, right?
Yeah, just because, mainly it came out of me just day trading a whole lot and then wanting to swing as well, but still having I want to scale out, but then I see a dip again and I'm like, hey, I can add at least some of the shares back, even if it's a small difference.
Yeah. And so the way that I think about trading in the core, I think about two different scenarios. I think about large caps and I think about small caps, things that move, really fluently, like let's call it like sub 80 million flow. When I think about large caps, again, if SPY starts to get into like this range, then what we'll see is, and where you can really use it to your advantage is that, let's just say that you have Apple and you have SPY up, and you identify resistance at 150. And the last 3 times that it's touched 150 or SPY at 440, it's broken down. You can sell 30 or 40% of your position before it hits that resistance point. If it breaks back, you can buy back half of that position. But if it fails, now you just locked in some profit. And then again, what's at the bottom of the range? Is that support? If you see support at 130, boom, buy back half of your position. And then if it breaks down more, buy back more. And that's one of those ways where you can lock in 8-10% gains on half of your position or even a third of your position. And like I said, and that's where your 401k can see massive gains. I was on a phone call recently, and one of the guys, he can't sit in front of his computer all day, but he has a 401k and he's trying to maximize returns. So I said, listen, figure out the range of the 7 stocks that you hold. When it gets up to resistance, just sell half. Okay. If it breaks through and comes back down to that resistance that's now support and it's starting to hold, buy back some of your position. So you're buying back higher, but it's really not too much higher. Okay. And you're going to get that confirmation. Okay. And his portfolio was up like his portfolio, he gave me like an update and it was up like 15%, which doesn't sound crazy, but when you get those 401ks and those Roth IRAs up there, that's like 30, 40 grand. So that's the one way that I see that you can use trading around the core with your large caps, like, again, 401ks, stuff like that. Anything you want to add to that before we go to small caps?
No, I think you killed down but for small caps, starting off, I think like you're saying, how it's different because how they can just get these random spikes, just always being aware and noticing when, hey, I don't think this is going to continue, or maybe this is just someone that tweeted it. And I'm like, it's just going to drop. This is just a little bit of volume coming in. I'm going to take this 5% whenever it gets clearly back down, and knowing the personality. Knowing, hey, this one always has a morning flush, or this one's always really hot right as the market opens, and just playing around that. And the longer you hold that swing, the more you get to know it, the better you can trade around it.
Yeah. And I think that really comes back to with the small caps, it comes back to 2 things: key levels and knowing the personality. So if the stock usually doesn't do well when, let's just say that when SPY's up, this stock doesn't do too well. Then if SPY is up like 3%, you can instantly sell inside the morning before the market opens, like 10, 15% of your position, and on a flush, buy it back. And same thing. And I think that like I've gotten better at this, but I'm still not great at this, is that when I see like big, huge candles, big exhaustion, someone tweeting about something, I'll sell a third of my position, actually like more like 10 or 15% of my position, because I know that that's not a natural movement. If it's an organic movement, then I want to see like a press release, or, I want to see like SPY being up a lot. And again, when it comes to that resistance point, I'll cut 5-10% of my position. And then, we know that it's going to dip at some point, and it's okay. I've had to get into that mindset that it's okay if it breaks out when I sell, and then when it comes back and tests that resistance, or that old resistance, new support, it's okay to add back there. But what I used to have, what I used to get myself in trouble with, is that I would add back, and then it would flush down. So that's the one thing, is that I think it's really important that if you're going to trade around a core, and especially if you're going to average up, you need to wait for that confirmation of that push through.
Yeah. I think knowing you don't always have to average up when you are trading around your core, knowing, hey, this broke out, and even though I did sell some, I still have 85% of my position, and I'm okay with that. I think that's one of the nicest things about trading around a core, is just having the comfort of knowing, hey, this is locked in, and even though I did sell some and I felt good about selling some, it's still going up, and I still have a good bit.
Yeah, exactly. And I think what made me realize that this is like the best way to do it is that one time I sold, and I almost top ticked it recently, one of the swings, and I was able to buy it back like 8% cheaper because SPY got flushed hard. And I was like, this is beautiful. I locked in like 15 grand on nothing, and I was able to buy it back cheaper on support. And I'm also like keeping it up because I'm support, like I was that support bid. So I think that was like my aha moment. But even more so, okay, let's take like a scenario. Okay, CEI. Let's just say that yesterday, you took a position when it broke out, or and we're talking about Wednesday now because today's Thursday, when it broke out over that like 418 level, and you sold half at 450, and you sold the other half, or you sold half at 450, and you sold another third at 480, because again, VWAP at this point was sitting at 369. So the CEI was $1 above the VWAP. Okay, which is just insane. Okay, we have to like moving averages are supposed to be pretty close to the price. So when they get this super, like just way off price, that's when you want to add. I mean, that's when you want to sell some. And then when it gets the other way, it flushes down below VWAP, that's when you want to add, if you're a day trader. And so that's one of those ways where even if you got caught inside that down haul at 485 to where it down halted to, like, what is this, like 390, so almost $1 per share. That's one of those situations where you could have instantly added back. So you could have locked those gains and added some back if you felt like it was going to go higher. And now you just had almost 2 perfect trades on it. So I think that that's just a scenario. Go back and listen to what I just said and pull up the chart, and I think it'll make a little bit more sense. But part of this is that, listen, if you get so far away from the technicals, that's when I think, for me, because I didn't really know when to cut some. But for me, it's like if I look at the VWAP, I look at the 200-day moving average, I look at the 50-day moving average, and the price without having any good news is just so much higher than those technicals. That's when I'm like, okay, then let's call it anything above 10%. That's when I'm like, okay, let me cut half, because we are going to see at least a pullback to those moving averages.
Yeah. And I think just going back to it, if it doesn't, and you've sold that much, and this is a swing, are you going to add the breakout if you sold a whole 50%? When we were kind of just talking about mainly just doing 10, 15. If you're trading around your core and you're comfortable with how it comes back, one that I recall was, and we mentioned this a good bit, Mark, whenever they would tweet, it'd go from 36 to 40 cents, 36 cents to 40 cents. And that's a 10% run. And it would happen every day. So for months, and we just would be selling all of our position. And then one day it just went up and up and up and up, and it never stopped. And I was like, damn, I missed the big run. So how do you decide when you're going to just add that breakout? And if it doesn't work, do you cut, or are you just like, hey, I've gotten such a cushion from trading around my core, I can accept a 10% loss?
Yeah, no. So for me, it's all about, and this is probably not the best mentality, but for me, it's all about how much am I up on this actual ticker. So if I'm only up, let's call it like 3%, I'm like, nah, like I'm gonna let it ride a little bit. But let's just say that I've locked in let's call it $40,000 worth of gains, and I have $300,000 inside the stock. Then I'll give myself a little bit of breathing room, because now I feel mentally like I have that breathing room. I don't know that's probably not the best mentality, but that's just the way that like my mind kind of works.
I think that's the biggest part about all of it, though. I mean, yesterday you see everyone freaking the fuck out over CEI. If they were trading around their position or at least scaling some out, I don't think you'd be freaking out, because like we were just talking about, 20% out and your whole position's free. And yeah, I mean, losing profit still sucks, but at least you have some clarity.
Yeah, exactly. And that's why I think that's what really did it for me. I was like, oh, this makes sense. Like, now I get this, because on a dip, I'm like, I already got those gains locked in. So even though my unrealized is going up and down, my realized is sitting pretty. And it actually gives me more conviction than what I had, because I had already locked some in. And then what it also does is, because I keep that low average, even if we get news, I'm okay with slapping the news. So let's just say that I have 10,000 shares, or let's just say that I have 20,000 shares, and I sold 10,000, and the next day we get news. I'm okay with slapping 6,000 shares, on that news and averaging up. And it just comes down to like being nimble with it. Okay. I'll scale out of those really, quicker for $1 or $2 per share. But again, that's like, I'm locking in more profit. And then if we downhaul, guess what? I've already traded around the core twice. I've locked in, let's call 30% of profit. And if it downhauls, fine, I just get out and maybe I give up half of my profit.
Or it's like CEI and you just find the bottom and you reload.
Yeah, exactly. And that's the thing, is that like CEI's chart is so beautiful that it's like you had so many chances to lock some prop. Like, it literally would only pull back like 10%. So you could sell some, get back in 10% lower.
Yeah,
and continue.
You wouldn't have to wait too long to get your precious shares back.
No. Like, I'm looking at these candles, and it's like green candle, small red down, green candle, like. Those are like, that's a perfect trading around the core. Like, you could have locked in huge gains. Even if you didn't just hold, even if you sold around the core.
If it's doing like a 5-step forward and 1 step back and 5 step forward and 1 step back, that's like perfect situation to trade around the core. And for people that have jobs and stuff, you can trade around your core too. If you see one of your swings are up 6-7%, or you just happen to check the chart and it looks like it's up, or you look at you do some technicals, it's like, okay, hey, this is a good spot. Don't ever feel bad about just taking some, and then you look later, right as you're about to get off work, or you're off work and it's after hours, you see a dip, and or just toss a bid in after you sell yours for that 2% lower. Just grab some back. I mean, I remember when I was working, and this is how I like kind of developed that strategy. I mean, it started with GHSI. And I think just relating this to it as well, with GHSI and CEI is, I think, one of the biggest issues with newer traders is when they see these price targets as like the holy grail. If you're waiting for that 10, how many people do you think have that 9.99 sell limit? Stuff like that. And why do you think it's going to 10, aside from someone said so?
Well, it also gets back into like, if I'm sitting there and I'm thinking, oh, I want to sell at $9.99 if the price target's 10. Well, wait, hang on. Dan's probably thinking that too. I want to undercut Dan. $9.98, $9.97, and then all of a sudden it's like $9 is like everybody's spot now. You know what I mean?
I mean, you saw it yesterday at $5.88. I mean, $4.88. Yeah. They said they're like five's coming, but I'm smart.
Exactly. And that's where, that's why I don't really like price targets. But, CEI has been incredible. The one thing that I will also say is that don't ever if you're going to trade around the core, don't ever let a really great trade go bad. There's conviction, but then it's like, why am I doing this for so long? Because again, 1 billion shares trade yesterday. So if 1 billion shares trade, but instead of on the green side, on the red side, I mean, CEI could get smoked. So that's one thing to think of. And then the other thing that we'll touch on trading around the core is that when you get a bigger account, it is on some of these smaller names, it's not easy to get in and out of stocks. Like when you had like 500 shares, I mean, you could just get in and out like no issue. But now if you flash on, let's call it like $1 billion company, if you flash like $200,000 shares on the ask side, all of a sudden algos start selling into the bid, and then it's also like, now you're that wall and you're resistance. So trading around the core with a bigger account also limits that slippage. If we get big green candles and tons of volume come to the buy side, just sell like, 2,000, 2,000, 2,000, these small blocks on the way up, so that if, God forbid, bad news does come out, you're not getting smoked because you won't be able to get out. You won't be able to get out. God forbid, bad news, you won't be able to get out.
Yeah. So,
and I know that.
Good.
No, I was just gonna say that. Like, I know that you got to have a bigger account for that to even matter. But that's what we're all striving for. Like, that's why we're all here. Is that so? Like, our issue is slippage. You know what I mean? Like, that's not a bad. It's a double-edged sword. Like it's like paying taxes. Like none of us love paying taxes, but it's a good problem to have.
And also, if you're a Zach Morris or laid back hater or Atlas hater or whoever, and you waited until after the 2 halt downs when the stock that was up 1,000% to talk shit, you're a loser. You're a loser. I think that's just a fact.
You're a loser.
And hell of a call by them. I mean, even if it never breaks what it did, I mean,
oh my God.
40 cents to $5, let's just say $5 in a dead market, and they summoned this shit out of nothing. It's like, I mean, wow, what a call. So big kudos to Laid Back, and then Zach joining that one. They tag teamed that one like crazy, and super impressive job by them too. You had something you want to talk about Tesla.
We'll talk. I'm going to read 3 tweets and then we can talk about it. Tweet number 1, Cathie Wood's ARK fund now down 10% for the year. Okay. It's tweet number 1. Tweet number 2 says one time big Tesla bull Chamath says he sold his position. Tweet number 2. Tweet number 3. Cathie Wood sells 340,000 shares of Tesla yesterday, or around $264 million worth, one of her biggest sales of 2021. And then this person followed up with, why would you sell if you have a $3,000 price target to buy things like Zoom, Robinhood, or Zillow? Her strategy seems disconnected to what she says on air. So what do you think about that? Chamath sold his shares in Tesla. Cathie Wood sold almost 300 million worth. Do you think it's time?
And Cathie's thing is down 10%.
Yeah, and Cathie's fund is down 10%. So what do you think about that? Any first thoughts?
So Cathie Woods, she's not like, is she very government? Like, she's not insider trading, is she? Or is that like up in the air?
No, she's pretty.
She's a good egg.
Yeah, she seems pretty good egg. Yeah, she seems pretty good egg. She seems like a Wall Street better with tons of money. It seems
like they don't like. Are they going? Okay, so Zoom, Robinhood, so tech space kind of fucking IPOs. I don't know. Hit me.
Well, see, this is okay. First off,
it seems like they don't like Tesla. I mean, that seems like a given.
Yeah. And we'll take the first tweet first because this bothers me because Wall Street is already Wall Street is already male dominated. It was worse inside the 80s, but it's already male dominated, especially for fund managers. Okay. And so for you to come out and say that she's down 10% on the year, yeah, okay, that's a fact. But also, let's take her 5-year. Dude, yeah, on the year. But her 5-year, she's up like 500%. 500%. The benchmark used to be the S&P index, like 8% a year. That was the fucking benchmark. She's up 500%. So I hate this. When I saw that tweet, I literally wanted to gouge my eyes out. I just think it's so stupid when I see tweets like you'll never see a tweet like Kathy Woods up 500% last 5 years,
down 50%.
Yeah. Like Chamath gets grilled on TV last night, and what happens? He comes out and he says that we should be questioning the efficacy of short sellers. What? And Kathy Wood, and then we're gonna come back and we're gonna say Kathy Woods is down 10%. It blows my mind sometimes that some of this is just like okay on the news. Like Chamath last night. Did you watch the interview last night?
No.
He went, dude, you missed out. He went online. He literally went on TV, and when asked about if it was ethical for him, for what he did with the SPACs, he said, we should be looking and he said, I'm curious, we should be looking closer at short sellers.
Maybe this is what he meant when he tweeted about to fuck some shit up. Just FYI.
Dude, he sold into retail. He literally was tweeting out like, oh, like this shit's gonna moon. Like this company's gonna be the next one. And then he sells all his shares in all the companies and all the SPACs. Mind you, he didn't get in at like $10 a share. He got in at like $2 a share. So this motherfucker made 300% tweeting out this thing's gonna be the next, Amazon while he's selling into it. And then he's going to go on TV when questioned about it, and he's going to say, I'm curious why we don't look into short sellers more. Wait, if I knew that you were selling into the companies that you're pumping, I'd be shorting you too. Like
he's living the Sri Lankan American dream, man.
I literally can't, there's so many case studies over the last 6 months. I can't believe that that's allowed. But then we can come out and say Kathy Woods is down 10% on the year. Mind you, she's up 500%, taking on billions of dollars. Like she literally, it's not like she has $1,000 account. She has billions and billions and billions of dollars.
You want to kiss her?
Dude. It makes me so mad. Like Wall Street makes me so mad sometimes. Like that, it makes me so mad that this is like
and it
that
made
the narratives can be
so
smart.
mad that she sold her Tesla shares.
She didn't even sell that many. She still has a massive position. Like, we don't know what she's going to do with that money. Like, you can't just guess that she's going to throw it in Zoom. Like, we can't just guess it. Like, that's so stupid. There's so many options. She's trying to start ETFs. She's trying to do so many other things just because she sold some of Tesla. And guess what? Tesla's at 800. Okay, clearly her selling didn't do anything to Tesla. I mean, Tesla's high inside the last month, I'll tell you right now, Tesla's high last month is $7.99. It's at $7.86. So clearly it's not. So all that nonsense that Tesla's only up because of Kathy Woods, you know, like all that nonsense about her pumping Tesla. She sold 260 million and the price is almost near its month high. So get the fuck out of here. It makes me so, some of this shit makes me so angry.
Yeah.
Now, Chamath, on the other hand.
And was I supposed to get that exact same answer from those reading those three tweets whenever you said,
I was expecting you to be fired up, Dan.
Yeah, no,
like, this is
now that you've somehow intertwined them all against like inequality on Wall Street against women. You're right. I did not see those all three in that. But now I do. You've opened my eyes. I see it clear now. And
Thank you.
Yeah.
And Chamath, dear God, I want Chamath on this podcast because I swear to God, if I was interviewing him and he said to me, I'm curious about short sellers, I think I'd edit that out, Vinny, because we can't say that. But it's just so stupid. You were selling into the things that you're pumping after making 300% on billions of dollars. I can't.
It's called hedging yourself, man.
Dude, I'm literally sweating. I can't. I literally can't. Like, it's not even like he sold 10% of his position to lock in the insane profits that he made. He sold all of his position. Like, the same days that he's tweeting that, like, SPCE is gonna be the first one to take, civilians to the moon. Like, come on, dude. Like, the same day that he tweeted, like, we're going to fuck some shit up, he went away for 3 months after selling billions of dollars of these companies.
Yeah, stock went down a lot. His stock didn't go up until Reddit made it go up.
Dude, I just... all right, I'm done. But this is just... It's so stupid. It's so stupid.
Clove. All right, well, Kathy Woods, sorry about it.
Dude, why aren't you mad about this?
I'm pissed. I don't have any word. I'm just mainly thinking of like what actions I can take to kind of like raise awareness about this and put an end to it. And I'm just like, I gotta stay calm. You gotta fight power with brain power. I don't want to like come off as the aggressor. So Kathy Woods, I do apologize. You're down 10% on the year. You should have bought AMC at the beginning. That probably would have helped. That's really what buffered a lot of our accounts. DM us. We'll send you some plays. And Chamath, keep fucking shit up, man. And what? I mean, I just, keep hustling, I hope, I mean, obviously in a one-on-one, I'm going for Kathy, but I mean, come on, dude, back in January, dude, Chamath, like he had our hearts, man.
As he was selling into us.
Okay. Yeah. I didn't think about it like that. That was kind of fucked up.
Like he was making $300 million because he was tweeting.
Imagine Wall Street Bets squeezed Chamath on Clove that time.
Well, also, he's talking about. I mean, if we want to go into Clove, okay. You know what he said about Clove last night, dude? Or do we have time, or are we done?
Dude, I don't think we have like a time limit.
Dude, he said last night. Oh, so all these short reports came out about Clove and like how they're misrepresenting themselves. And he goes, oh, like we talked about inside the disclosures. Are you serious? You can't, like the fact that it's okay for him to tweet out like Clove is going to have 700 doctors, inpatient doctors by the end of the year. And inside the disclosures, they're like, oh yeah, like we're in
700 patients.
Yeah, like inside the disclosure, like, yeah, like we're not going to have 7 like that. Like we're not even going to hit 7. Like maybe we'll hit 10 if we're lucky. Like that's complete misrepresentation. And you can't just say, oh, it was inside the disclosure. Like in what world is this okay? Like that can't be okay for you to just come out and completely misrepresent the company and then come back and be like, oh, like, like we said inside the disclosure, like this is risky. Like, what? I can't, man. It makes me so fucking bothered. It makes me so bothered, man. Like, does he not care about his name? In my eyes, that tanked his name. Like, before you can say what he wants, if he ever goes on Shark Tank, I swear to God, I'll stop watching the show. And I love that show.
Oh, like as on. I never.
Yeah.
Okay. I forgot. Is he like an option to replace like Mark Cuban?
I mean, he has more money than,
I like how Mark
a few of the Sharks.
Well, yeah, dude, Mark Cuban has like, I think like 8 times or like 10 times the amount as the second wealthiest one. Because he's
yeah,
he's
that's what I'm saying. Chamath has more than Chamath has more.
Mark Cuban can just be a douchebag and be like, oh fuck, well, Mark can just outbid us all if he wants.
Yeah, I don't know. It makes me so mad because I feel like I feel like, Chamath, you were so rich. Like, did you have, and you were already so rich. And 2, you got into these companies and you were already up like 200% before they even went and came public. Like, you were already up hundreds of millions of dollars. So you would truly need the stock price to fall 50-60% for you to even come close to your average. Did you really need to go on?
And
I can't.
And I think we can end the podcast on this note. If Chamath, a billionaire, is still out there hustling and chasing that bag, you better keep chasing that bag too. I hope y'all have a great week.
That's your takeaway?
That's the hustler's mentality, man. He's got it, and he's still out here hustling, grinding.
I can't. End the pod. I can't. Yeah,
love y'all. Bye.